where is it? Right here. Right? So we talked about this one, we looked at it, it was a $1.30 credit, and it's pretty much over. It's going to expire worthless today, so that one worked out great. So $1.30 was $130, twice is $260, minus the commission of 2 by 4. So that would be a total of 6 options. So it would be $260 minus the commission on 6 options. Now, why do I say only 6? Well, because these are about to expire worthless. So if they expire worthless, we don't have to, there's no commission involved in letting them expire 2 hours from now. Just go into the trade page, look at Chipotle, I'm sorry, CMG, Chipotle, same thing, CMG, enter. And if we look at our position, let's close all the strikes up. There we go. We have our earnings play, the remainder of it in here. But we need some more strikes because it's obviously in a put that is so far out of the money now that it looks like they're pretty much gone. So let's put in, I don't know, 40 something strikes. Oh, there it is, it's starting to pop in. But that's not all of it, so we're going to need more strikes than that. There we go. So here is the original 1 by 2 put spread that we did yesterday. And it's 0 bid at 5, and this one is 0 bid at 5. So in other words, the 2 puts that we have, these are the 90s. Now we bought the 90s. They're about to expire. We can't sell them. There's 0 bid. Now remember, when anything has a 0 bid, you cannot sell it. You cannot sell something for 0. All right? So that precludes us from being able to say, well, listen, let's sell that 90 put that we bought. Remember, we bought 2 of them. I'll click on the position. Remember, we bought 2 of these for $5.50. So we can't do anything there. What about the ones that we were short? Well, remember, we sold 4 of these for $3.40. We could buy those back for a nickel, right? And that would give you, that would close up any of your risk for 5 cents. Now, 5 cents, we buy back the 4 for 5 cents, then there would be no commission on that either. Remember, if you buy back a short call, not the spread, just the short call, for 5 cents, there's no commission. So it would cost you $5 on 4 options, that would be $20, right? 5 cents on 4, be $20 total, but no commission on that either. So either of those. Or we can do like this group just did. We said, you know what? Those are the 380s, and the stock is trading for 440 with 2 hours to go. Maybe we'll just let those expire worthless and not worry about anything. And that's kind of what we're going to let this one do. So let's go through, again, the Breakfast Club. Let's go through, sorry, I'm just joking, about what some other people did. Now, because we also talked about this yesterday, you don't have to do the 1 by 2. We did that because we didn't mind owning a couple shares of stock. What if you did an iron condor and you went $30 lower and $30 higher? Well, remember where the stock was. It was 420. I'll highlight where the stock was, right here, 420. And if you did the iron condor, you would have gone down to the 390 put, that's $30 lower, right? And you would have gone up to the probably the 445 or 450 call, somewhere up in here. Is that right? So, yeah, that would be $30 higher, right? And I'm looking at those two right now, and they both look like they're trading pretty much at nothing. So I'm going to guess if you went an iron condor, maybe you wouldn't have used 450. It might have been something like the 445. Okay, let's be a little bit more reasonable on that. I think the expected move was 27, 29, something like that. We can always check and go back by going to the Analyze tab, going to Think Back, putting Chipotle in there, CMG, enter, and it will give you yesterday's numbers right off the top. And you can see the market maker move. Yeah, it was about 30, 29.63. All right, perfect. So now we know where it was. Oh yeah, and by the way, where was the front month implied volatility? 151. 151. And it was a $30 move. And the stock was, let's just say, we'll round it, right around 420. That'll make it easier for us. All right, so back to trade page. So if it was around 420, $30 higher is actually, you're right, it would be 450. So we'll split the difference and call it 447 and a half. And $30 lower would have been about the 390s or maybe the 392s or 395, somewhere around there. Doesn't matter. There's still 0 bid. I mean, there's 0 bid all the way to the 415 puts. And then, of course, the 447 calls are somewhere around 30 cents. So obviously, you know, that should have worked as well. So let's go through. I see a couple of people starting to type some strikes in. And let's see. So Goatherd's first one I saw in here. He sold the 390, 380 put vertical. Wow. So that must have worked really well. The 380, 390 put vertical. Now that's just a put. I'm assuming that's not a ratio. That should have worked well. well as well last night. We can go to the Analyze tab and take a look at what those are. We need obviously some more strikes here. Let's put in 40 strikes or something like that, and see. I'm going to lower this down so we can see on the. Now again, we're on the Analyze tab. Think back because we want to see what the prices were yesterday. Let's see it here. So I'm sorry. Let me go back and take a quick look. The 380, 390 put. Well, where did that close right now? Here's the 390 put for 530, and the 380 put for 330. So it looks like that was about $2. I'm going to guess a little under that, maybe $1.80, $1.90, or something like that. Well, today that spread is 0. Okay, so obviously, if you sold that put spread, I'm going to guess worked out quite well. All right. Again, that's for. Let's see, who else do we have? JMC sold the. JMC sold the 360, 460 strangle. Ah, interesting. 360, 460. Well, obviously that is at 0 right now. But what was that able? What were you able to sell that for yesterday? Well, let's see. The 460, 360. Well, the 460 was wow. Look at that. The 460 was trading 240 yesterday. So you would have collected 240 on that call, selling the 460, and of course the other put was the 460 put. Oh my goodness, I don't even have that on my screen. So I'm going to need some more strikes to get down to the 460 put, or the 360. That was trading for about $1. So it looks like you would have collected about $3. Again, I'm rounding, about $3 credit on that, and of course that is now trading for 0. Again, this is yesterday's price. Okay, so obviously that one would have worked out pretty well. I'm just kind of thinking most of these are going to work out pretty well. Let's see. I'm going down to Courage. Sold the 390 put and 450 call straddle. Wow, we had some call straddle sellers in here. What? Those worked out pretty well. Top sold 2 puts of the 385 and the 382.5. Oh, okay, so that was a little bit tighter. And then did the call 452.5, 455. Okay, sold 2. So that was a spread. I'm going to guess that was basically I'm going to guess that was like an iron condor. 82.5 foot, and 452, 455 foot. Yeah, I'm going to guess that was an iron condor. So obviously that worked out quite well, of course. TO, let's see, 390, 180. What? 309, 180. Oh, those are the prices. 465, 470. Okay, fine, that's worthless. And the 385, 370 foot, fine. Okay, those all should be expiring worthless as well. The upside we don't know. Chipotle might have a little rally left in it on the close. We'll see how it acts on the close. Okay, I'm going through all these. This is great. Thank you everybody for sharing these. You're no longer on detention. This is great. Let's see, CMG. I'm looking at Maya now. 370, 375 call. I'm sorry, put, and the 455, 460. Sold it for about $1.28 credit. Perfect. That's it. 0. Now again, I don't know if you're closing these things yet, but it looks like those. Again, if you still have them now, they're basically trading for nothing. And I see some people are just letting them go well worthless. CE did the 370, 375. Well, that's mine. Let me go to the 390, 386, 1x2 for a 315 credit. Oh, okay. Oh, I see why. Because you tightened up your 1x2. Okay, now that's interesting. So again, let's look at our 1x2. We did the 390, 380 put. Now, and we collected $1.30. And I'm just looking at CE's example, and CE did the 390, 385 put 1x2, and collected $3 credit. So obviously a lot more. Well, why did CE collect a lot more? Well, think about it. Did the same as us, bought the 390 put for $5.50, but sold the 380 put twice for a lot more than $3.40, right? And thus collected a lot more premium. What was the 380 put last night? Well, go back here, take a look at 380 put. It goes to 335. 335. And so ours was, well, that's kind of interesting. We have 340 on 8. So again, depending on what the prices were, I'm going to guess it was higher at the time. Because it has to be. The 385 would have had to have been higher than the 380 put, because the 380 put's further out of the money. So let's just say this was 440. Well, then look what happens to your credit. It doubles. So 550 minus 440 twice is 850. Yeah, that gives you $3. So again, that could well be how those work. Now I kind of lost my place here. I'm going to go back and just see if I can catch back up here.